Datadog, a cloud company that I've owned for a long time and will continue to own, just reported earnings. They beat estimates on earnings per share and revenue, and they increased their guidance higher than what Wall Street was expecting. And the stock is actually up today. This is crazy. All right, obviously, I'm just having a little bit of fun, right? On what is finally a day where the portfolio is up. We're up almost $2,000 today, up at about 109,000. But as you know, if you've been watching this channel, I share all this transparently. It has been a tough year, okay? We have to keep our heads up and we have to stay focused. This is not the time that I will be selling. We're still down $23,000 since February 15th. I've put in 132,000 and we're only at 109, right? I'm not worried about that. I've got a long-term time horizon. Datadog reported Q3 earnings. They raised fiscal year 22 and they initiated their Q4 guidance. So they beat on non-GAAP earnings per share by 7 cents, pretty good beat. Revenue of 436 million was up 61%. That beat by 22 million. Operating cash flow of 83 million, free cash flow of 67 million. This company checks all the boxes of like an elite company that you would want to own, other than for some people, and this is why the stock's down, right? We can see the stock along with every other stock in the market basically, except for some energy stocks maybe, is down a lot, right? From 160 down to 80. That's a 50% reduction. People say that happened. This is a trash company, right? No, this is not a trash company. It's one of the best companies of our time and the most efficient, the most capital efficient companies of our time. They hardly had to raise any money as a private company, and they've just been extremely capital efficient. It just got overpriced, right? But let's not lose focus and think that means it's a bad company. It's not. Cash and cash equivalents, marketable securities, 1.8 billion. So this company's not going anywhere. They're not going under, nothing at all like that, right? They had about 2,600 customers with annual recurring revenue of 100,000 or more. That's not a fake company, right? Those aren't going away, which is up 44% from about 1,800 as of September 30th. So over the last year, they grew their customers spending 100,000 or more by 44%. Pretty incredible. Then they came in with their guidance, right? Revenue between 445 million and 449 versus the consensus estimate of 447. So they're beating that. Operating income between 56 and 60 million. Non-GAAP net income per share between 18 cents and 20 cents versus a consensus of 13. So far better than consensus. And then for the full year, revenue between 1.65 and 1.654 billion versus a consensus of 1.63. So they did come in above consensus, even on the low side of their guidance. And then net income, non-GAAP net income per share, 90 cents to 92 versus the consensus of 79. So again, crushing those consensus estimates. Okay, I do some things different here. I show you the value of my portfolio. There's only a few other channels out there doing that and showing their real money. Shout out to Joseph Carlson. You've been a huge inspiration to me in this channel. But I also want to go a level deeper into the things I'm talking about and the stocks I'm talking about, right? I want to provide high quality financial entertainment, because this is not advice, to people who are looking to actually learn about stocks and about investing, not just have clickbait, right? So I'm going to talk about this. I'm going to cover some highlights from the conference call that management talked about. And then I'm actually going to go into what I think a decent valuation or multiple to be buying Datadog at is, and where I would think about selling my shares, right? So we'll finish up here in the next couple minutes, but just stick with me. And if this is valuable, it helps support the channel if you like the video and subscribe to the channel. All right, they held their 2022 Dash conference. They announced 18 new products across the platform, which is what we want to see, right? The reason this company is successful, and I'm going to get into this in the transcript and the notes I took on the earnings call, but it's because they continuously innovate, they serve more customers, and they get their current customers to spend more money because the products and the platform is valuable. Okay, the things I want to highlight from here are their progress and partnership with the big cloud providers, because this is how companies get a lot of sales. They achieved Amazon Web Services, security, network, and retail competencies. In total, they now have 9 competencies, the most of any integrated observability company supporting AWS to date. That's going to help them get more sales, because AWS customers that need those services, Datadog's going to be the one that pops up, and they're the most credible and reliable according to those competencies that they get from AWS. They extended their monitoring for Microsoft SQL and Microsoft Azure database platforms. With this expanded support, engineers and database administrators can quickly pinpoint and address database performance issues such as costly and slow queries. So again, for Azure customers, that's going to make them a more attractive platform. All right, a few highlights from the earnings conference call, right? This is taken directly from the company's earnings conference call. So again, they had 437 million in revenue, which was a 61% increase. What I want to point out is that that was the high end of their guidance, even in these tough economic times. Talked about this, they're generating free cash flow, a free cash flow margin of 15%, which is fantastic for how fast they're growing. And this is key. Dollar-based net retention rates continue to be over 130% as customers increase their usage and adopted more products. Dollar-based net retention is one of the most important metrics for cloud and SaaS style companies. That just shows what current customers are spending from one year to the next. If it's above 100, so in this case, we'll say 130, that means current customers last year are spending 30% more this year. That's pretty much 30% revenue growth right there automatically. And yes, they have to earn it, but those trends tend to not drop off drastically from one year to the next, right? They might lose a few customers here or here, it might tick down a little bit, but that is an indication that they have products and a platform that are serving customers well and getting their current customers to spend more money, which means they're providing more and more value. They have a lot of customers that are using more and more of their products. So they measure who uses 2 or more, 4 or more, and then even 6 or more products. And so 80% of the customers use 2 or more products. As customers use more and more of their products, it makes it less likely they would ever leave them for somebody else because they can't replace all that stuff, or it's harder to. And then 16% of customers were using 6 or more products, which is up from only 8% a year ago. So that's great right there. They call it out, and this just comments on like kind of the economic situation, right? The macro situation. Q3 was very similar to Q2 with strong performance in new logos and new product attach activities, tempered by growth of usage from existing customers that, although healthy, was below the long-term historical averages. It's because it's a tough economic time, right? Okay, and this is why they're cream of the crop in cloud providers, right? Revenue grew 61% year over year, 7% quarter over quarter, with all of our products meaningfully outperforming the growth of the large cloud providers. Macroeconomic environment is likely to remain a headwind in the near term. We continue to see positive trends underpinning our business and in bullish about long-term opportunities in aggregate for our investment plan. So they're still feeling positive about the future. Now let's get to valuation. This is the reason a lot of people would never own this stock, and I understand it, right? It's trading, if you ever trade off PE for these stocks, you would never own this thing. It's at a PE of 91, right? But for these types of companies, we look more at a price to sales multiple, right? So we've got a price to sales multiple of 17. And what we wanna see is we wanna compare price to sales multiple right now compared to the sales growth rate, right? So you probably can't see this, but I'm doing this calculation. We've got a price to sales multiple of 17 right now. We're gonna jump over to their expected revenue growth for the next fiscal year, right? And this isn't a perfect calculation, but we want this to be historically over the past 5 to 10 years, with the exception of the crazy jump in 2021. But prior to that, the average of this number that I'm about to do for cloud type companies was about 0.43, right? So we're gonna divide the price sales ratio, 17, by the year over year growth rate expected for revenue for the next year and get an idea of that, right? So we'll go 37. 17 divided by 37 equals 0.45. And that's not zooming in, whatever. But anyways, the point is that Datadog right now, based off its current price and current expectations for the future, trades just slightly higher than where cloud stocks on average have traded over the past 5 to 10 years prior to the crazy bubble behavior of 2021. I think Datadog is one of the best cloud companies out there, so I think it deserves a little bit of a premium to the average, and so I am more than willing to continue holding my Datadog shares. I will certainly not be selling Datadog. You can see it's up 1.7% today. My position is down pretty significantly, so I've put in $10,100 and I'm currently down $2,600. So I'm definitely down on the position, but I feel great about the stock from here over the long term. I'm not going for 1 month returns, 6 months returns. I'm not gonna tell you what stock is gonna rocket next. I don't know, nobody does. I'm just sharing what I own and what I think is gonna do well and ways that I think about investing. Not so people copy me, it's not advice, but hopefully to just inspire people to do their own research and start investing for themselves, saving money, living below their means, and owning things like even index funds, right? If you realize the power of compound interest and investing, simply putting money into the S&P 500, the VOO, Vanguard Index Fund, a dividend index fund, one of my favorite is SCHD. Doing that every single month for the next 20 years till you're within 5 years of needing that money can be a wonderful way to become a millionaire over time. I'd love to hear from you in the comments. Just let me know your thoughts on the market, if there's a stock you want me to review, and what you think about my portfolio.